Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you getting some good trades. For those who are familiar with MetaTrader 4, there are 26 indicators that are found in their standard indicator list. Today I want to talk about one of those indicators that can literally help you in determining a few things about the marketplace. First off, it can help identify a trade confirmation. Also, it will help you identify the bigger trend, the larger trend that you should be following. Also, it helps identify divergence, price reversals, and price extremes. Sometimes I'll look at this indicator just to give me some additional confirmation in the marketplace. What this indicator is the Commodity Channel Index, or what's referred to as the CCI. It was developed by Don Lambert and introduced back in 1980. It's a momentum-based indicator that helps traders identify cyclical trends, divergence, price reversals, and price extremes. Now the CCI doesn't always catch the tops and bottoms, but it can help you to filter out insignificant moves in the market and focus your attention on larger trends. So what I want to do now is just go over to my indicator folder. It's just a basic indicator, Commodity Channel Index. Now the Commodity Channel Index, the normal setting is at 14. I set mine to 20. 20 seems to smooth it just a bit, and it is a normal setting at typical price, and I'm going to apply it to my chart. For those of y'all who are thinking, well, wait a sec, I thought you always use the Trader's Dynamic Index. I do. The fact of the matter is, though, is you have several indicators available to you. And I've had people write me about the Commodity Channel Index, or the CCI, and I spoke about it today in my live active trade room and showed some examples of how you can use it to confirm certain setups. So if you don't see it in one thing, maybe you see it in another thing. And as I've mentioned before too, oftentimes trend lines will really help clarify what the market is doing or attempting to do. So let's take a look at the euro dollar today. We had a nice move down in the euro dollar today. As a matter of fact, I caught in the live active trade room, I caught this move down. We caught a 50 pip move this morning in the active trade room. And if you haven't joined me or haven't been in the active trade room for a while, it's now free. It's open to the public. And I show all my alerts. I show the orders that I'm trading. And so if you want to look over my shoulder, watch me trade, and also join a community of other traders. We got some really good traders in the room, and you can get tips from them. Then simply go to www.compassfx.com/forex signals and register. And it'll give you an opportunity to pick up on some of this information that I share with folks, and also pick up on a few trades along the way. So let's talk about this CCI. Now, I've got it on my chart, and if you notice that the CCI has 4 key, or referred to as major levels within the chart. It has a 100 and a negative 100. Now, a break above 100 is often referred to as a strong uptrend. A break below the negative 100, that's often referred to as a strong downtrend. Then we have overbought and oversold, or where the market reaches an extreme. So in this case we have the 250 on the top side and a negative 250 on the bottom. Now again, the CCI doesn't always catch the exact tops or bottoms. As a matter of fact, you can see here that the strength in the market made a move above the 250 mark here, and then the CCI started falling back down. Notice though that price continued to make a move up, and the Trader's Dynamic Index didn't falter. It stayed with what price was doing, even though the CCI fell back down. And some traders who look for the extreme overbought condition would have shorted right here, and they would have been out of luck because price continued making a move up. So again, the CCI is not necessarily a replacement of the TDI. It's simply a tool to help give me some additional confirmation. So let me show you how I use the CCI as far as confirmation. All you simply have to do is take a trend line, a diagonal trend line, and simply drag it across from top to top, and then carry it. Now you can put it on the ray, if you want, but you carry it on through. And what you're looking for is a potential break. And you can see that we had a potential break right there to the upside. Now, let me point out a few things. You want to connect your peaks and you want to connect valleys or the low points. So if I go from this low point across to this low point right here and carry it on through, you can see here how the market had come down and bounced, bounced, bounced. But look what's happening. As I draw these trend lines, you can see that the trend lines even got tighter and tighter. You see that bias to the downside? Now you see the same thing happening in the Traders Dynamic Index too. I use the peaks in the Traders Dynamic Index. You see this? And then I take the same and go from that peak down to this lower peak. Very much the same information here. What we're looking for is that potential break. And this is the beautiful part about the CCI, is waiting for the trend line break. So look at this. Today, the market comes down, 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 and then we finally get a break right there. Look at the TDI right there. And it's a strong break. We get this strong downtrend because we're below the 100 mark, and we're kind of bouncing around. You see how price is bouncing around up here? And then boom, here comes the big move. This was that 50 pip move I was talking about today that we got in the live active trade room. A nice strong move down. This makes a break right here, and you can see right in that area where we make the break. Okay, following the synergy process, you look for the price action channel to be broken by the average price bar. You look for the TDI green under red under yellow moving down, and look what the CCI is giving us. A nice clean break right here. Another thing about the CCI is keeping your focus on the larger trend. If you notice that we have this larger trend line right here, and notice that when price started to go up right here, again, what I look for in the TDI is that the green line is not above the yellow line. Okay, that lets me know that overall the market here is flat and potentially going to the downside because the green is under the yellow line. Down the CCI, I get that confirmation. We get this kick up in price, but it doesn't move above this larger trend line. So if we stay the trade, then we get a nice break below and we catch that push. So this is just added confirmation here. Now let me give you another example here. We'll go over to the pound Swiss. Pound Swiss made a pretty strong move up today, but it also had a couple of moves down. As you can see earlier today, we had this from peak to peak, we had this trend line down. And notice that you had a valley and another valley, and the market broke, and right there, it's not a big move, but right in that area you can see how the TDI and price started making a move. And so that break starts happening right in that area. Then we have another one. You can see right here there's a valley, another valley. We break the trend line, and you can see how the market pushed right down about that same area right there. Now check this out. This was our larger trend line right here of the move down, of this move down. Once that's broken to the upside, you have that added confirmation. The TDI has already given us a break right there, green over red, but we're not quite above the market baseline yet, but the market baseline is going flat. Take a look at this. As the green line breaks the market baseline, the yellow line, look what's happening in the CCI. We're breaking that larger trend line to the upside, and the market makes a move on up. Now again, this showed an extreme high point, and the market started coming back. And you can see in price, we had 1, 2, 3, 4, 5 lower lows. There was an expectation to see the market make a move down, but the market kept pushing up. And that's the difference where the TDI and the CCI is. CCI is based on that momentum in the marketplace. However, with the Traders Dynamic Index, you're comparing positive and negative sentiment, and there's multiple things that go into it. You can see that it did not go below the red, bounces back up, and is grinding higher, and now we're set for a possible move back down. So before I wrap up, what I want to do is I want to show you another price extreme seen in the CCI. you can see that the CCI made a very strong move up today, actually well beyond its average daily range. So if I go out to a 4-hour chart, you can see that price made a pretty strong move up, and we're very much near a possible top right over here. It's almost to some degree almost a triple top scenario right here, but you see this strong move up on the 4-hour. Now if you come down here and take a look at the CCI, you can see that the CCI is up here near the 250 mark. So the expectation is to see that possibly turn back over, start losing momentum and start turning back over. And if the momentum starts to calm back down, the CCI is going to turn, and what I'd be looking for then is a potential turn and a move back down in the Traders Dynamic Index, and looking for that TDI hook effect and a possible return back towards the price action channel. Well, folks, the Dean Malone with Compass FX. I hope some of the information here about trading the CCI as a confirmation tool will help you in your trading. Folks, the Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.